Forget Nvidia, forget Google. Soon they are going to crash, but this is the only AI stock that's worth investing in. In a sea of speculative AI trades, it's the only sure bet. But why? In this video, I'll be going over the reasons why the rest of the AI space is going to burn, how Anthropic will be the only AI stock left worth investing in after their IPO, and an additional tip at the end on the best way to invest in Anthropic. Before going over why Anthropic is the best AI stock, we first need to go over how Nvidia will melt down and take the rest of the AI space with them. To better understand the truth behind why Nvidia will melt down, we first need to go back a couple years, before the release of ChatGPT. Before ChatGPT triggered the current AI gold rush, Nvidia was a powerhouse in the semiconductor industry, but its primary identity and revenue drivers were significantly different than they are today. But how? For most of its history leading up to 2022, Nvidia was synonymous with gaming. While the company had been quietly building the foundations for AI through its CUDA software and data center GPUs, like the A100, the consumer market for GeForce graphics cards was still the company's bread and butter. For some additional context, gaming typically made up about 40 to 50% of total revenue. In fiscal year 2022, gaming revenue hit a record $12.46 billion, driven by the high demand for RTX 30 series cards. But since ChatGPT's release in 2022, the company looks completely different. But in what ways? As of recently, AI has become Nvidia's main source of revenue, dwarfing its gaming sales by 20 times the revenue, as 90% of its total revenue now comes from data center sales. So why is this indicative of a future collapse? As the AI race has accelerated, it has become more and more obvious that there will be big winners and big losers in the sprint towards market domination. For example, most know that within a year, ChatGPT will be dead in the water due to unsustainable costs and no clear path to profitability. The only large language model left in the space after a long struggle will be Gemini. As its parent company, Google is so massive that it can afford to throw away billions just to starve its competition on funding. The repercussions are enormous. The key issue with Nvidia's valuation is that it assumes that AI demand will stay consistent if nothing else. But as soon as ChatGPT or any other large generalist AI producers die off due to funding, that revenue instantly nosedives. Additionally, Nvidia's revenue is subject to even more uncertainty, as its buyer pool for data centers is concentrated in just 5 central buyers, meaning that a potential chain reaction of AI spending reduction in any of these companies would cause a crash in Nvidia's revenue, and therefore its stock price, which doesn't reflect this reality. Finally, the surrounding AI space would implode as more and more AI-heavy companies abandon their projects. Next, let's look at why Anthropic is set to be the best AI stock to invest in, and why they might be one of the few to survive long-term. There is a high chance the broader AI market will face a major slowdown soon due to overvaluation and companies spending too much money without making a profit. So, how does that leave Anthropic as a safe, smart investment? The key to Anthropic's success is a simple but brilliant strategy that the founders used to transform it from just another AI company into the leader of the pack. And that strategy is hyper-concentration. Most AI companies on the stock market today either sell hardware components like chips and GPUs, or they build large, general-purpose AI models that try to do everything. Anthropic took a different path. Instead of following the trend, they asked themselves a key question. If massive companies like Google can afford to beat us in general-purpose AI, what can we do to stay relevant and make real money? Their answer was hyper-concentration. Instead of trying to make an AI model that is okay at everything, Anthropic focused on making an AI model that is absolutely amazing at one highly valuable task. For Anthropic, that task is coding. In recent months, Anthropic's coding capabilities have completely dominated the market. Their AI has evolved into a tool that can independently write, test, and fix complex code across entire websites and apps. While tech giants like Google can afford to lose money running general chatbots just to starve out the competition, users are willing to pay top dollar for a tool that actually makes their business more efficient. Because Anthropic has focused so aggressively on software engineering, they have built a massive head start over everyone else. This makes them the leading force in the market as they prepare to go public. To see just how profitable this business model is, look at the cost savings for businesses. A human junior developer or coding intern typically earns a salary of around $60,000 a year. Meanwhile, Anthropic's high-end Claude Max subscriptions cost between $100 and $200 a month, which comes out to about $2,400 a year. This means a company can get the same level of coding output for 25 times cheaper than a human intern. When compared to a senior engineer making over $100,000, the AI is nearly 50 times cheaper. By tying their product directly to saving companies time and money, Anthropic has built a business model that will survive an AI bubble and deliver massive returns for investors. Finally, a keynote on when to invest in Anthropic. As previously established, Anthropic is a clear winner in upcoming AI companies. But if you invest at the wrong time, you might just end up trapping your capital at the absolute peak. How? Because Anthropic is not yet publicly traded and is planning on going public through an IPO sometime this upcoming year, it's important to recognize a key fact that makes the stock quite dangerous to invest in immediately. The answer is volatility. Oftentimes, IPO events are unpredictable. Massive swings can happen anywhere between 10% to 200%. That means an investor who jumps the gun, buying into a massive 120% opening day surge only for the stock to crash 80% the next hour, has to wait for the stock to rally a staggering 400% just to get back to where it started and break even. Additionally, this period of volatility often extends past the initial date of the IPO, sometimes for over a month, with large price swings frequently in the double digits. Take Circle Internet Group, a stablecoin finance company. Priced at $31 for its June 2025 debut, immense demand caused the stock to skyrocket past $250 in short order, only to lose roughly 70% of that peak valuation over the following months. Keeping this in mind, it's essential to keep a cool head and avoid an early investment. To mitigate risk, it's better to invest 2 to 3 months post-IPO and maximize your chances of success. So, the bottom line? The AI space is about to get a massive reality check. NVIDIA is priced for perfection, but Anthropic is built for utility. If you enjoyed this video, do me a huge favor, hit that like button, subscribe for more deep dives just like this, and let me know in the comments if you think ChatGPT is actually going under. And finally, thanks for watching.